Now, you see, dividend stocks can make you rich. They can help you build a reliable source of income from the stock market, one that you can count on to grow steadily over time. The key, of course, is knowing what to buy and when to buy. So in today's video, we are looking at 3 outstanding dividend stocks that are particularly compelling to invest in today. Hey guys, it's Julius and welcome back to the channel. Before we get into buying stocks, it's important to first understand that the per share price has absolutely nothing or zero bearing on the value of the underlying business. Put it this way, a $30 stock is not cheaper than a $40 stock. Now, stocks are priced on a per share basis and the number of available shares varies widely between companies. Now, think of a pizza that has been cut once down the middle. Each half constitutes one slice or share of the whole. Cut the same pizza again and you now have 4 shares. Now the number of slices has increased and the amount of pizza per slice has dropped, but the total amount of pizza hasn't changed. A whole pizza sliced into 4 slices isn't cheaper than a same size pizza that's been cut into 2 pieces. It's the same amount in either case. You just pay less per share. Now the same process applies to stocks, whose prices can be manipulated by companies performing a stock split just like Apple just did. So when evaluating the value of a company, it's helpful to look at the market capitalization rather than the share price. For instance, if I have an X stock priced at $1,000 per share, but with a market cap of 26 billion, then you have a cheaper Y stock priced at $100 per share, but with a market cap of over 250 billion. You can see that X stock is more expensive than Y stock. However, Y stock is more valuable. So with that in mind, let's look at some attractive dividend paying stocks for 2020. Our first stock is going to be AT&T. Now, if high yields are more of you think, AT&T may be the right for you. AT&T is often considered a stable dividend stock for conservative investors. It has established itself as one of America's top telecom companies. It pays a forward yield of nearly 7%. Now, that's pretty compelling. The AT&T's wireless business is still growing with an 8% annual increase in subscribers last quarter. And the launch of its new 5G phones could boost its average revenue per subscriber again. Now, AT&T debt levels look high, but only 15.6 billion of that total matures within a year. AT&T should easily cover those payments and still have enough cash for its dividend. After all, it only spent 57% of its free cash flow on its dividend over the past 12 months. Furthermore, AT&T's 36 straight years of dividend increase makes it a great dividend paying stock. It's highly unlikely AT&T will give up that title, even if its earnings continue to decline or threatened with a credit rating cut, since many investors only own the stock for its dividend. Our second stock is Coca-Cola. Now, for around $50 a share, investors today can own a share of one of the most valuable companies on the planet. Now, yes, Coca-Cola is facing major challenges to its business these days. Demand for sugary soft drinks has been on a steady decline in recent years, and consumers have shifted consumption away from the Diet Coke brand that dominated the industry for decades. Now, these challenges have made it hard for the beverage titan to boost sales volume lately. Yet, there are many advantages to owning Coke today. It has for decades been the undisputed leader in delivering a product that consumers around the world consider a staple for their diet. Now, Coke owns the world's top 5 soft drinks brands and serves 61 billion drinks each day to thirsty people around the world. Investors interested in a steadily growing business that returns most of its direct cash to them each year should consider buying this stock. Lastly is Home Depot. Now, as the pandemic and related social distancing guidelines drive people to spend more time at home or indoors, many are choosing to invest in home improvement projects. Now, Home Depot, of course, is a major beneficiary when it comes to this. The retailer recently posted a strong first quarter results, Now sales rose 7.1% to 28.3 billion, driven by a 7.5 rise in US comparable store sales. Better still, Home Depot's operating and free cash flow jumped 22% and 28% respectively. Now Home Depot's strong cash generation has allowed it to increase its annual cash payout to investors for 11 consecutive years. Now the home improvement titan recently boosted its quarterly dividend by 10% to around $1.50 per share, and its stock currently yields a solid 2.3 dividend. Now you see, all these companies have continued to pay dividends to their shareholders, and I don't see any of them stopping anytime soon. Now please remember, before you invest your money in any of these dividend paying stocks, you need to do your research and also consult professional help due to the risk involved when it comes to investing in the stock market. Don't forget to hit the like button and consider subscribing to join the journey. See you in my next video.